Okay, welcome everyone. We'll start our third lesson, lesson 3. In this lesson, we'll go through our LO3, which is Learning Outcome 3, be able to prepare a credit control policy. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, just drop me email. I'll try my best to get back to you as soon as possible. So before starting today's lesson, first we'll recap what we learned in the previous two lessons. So we'll go through. So in lesson 1, we learn about understand the regulatory framework. We discuss about IASB, International Accounting Standard Board, set the standards, and we discuss IAS 1, International Accounting Standard 1. We discuss IAS 2, International Accounting Standard 2. We discuss IAS 16, International Accounting Standard 16. We discuss qualitative characteristic of financial statements, which we discuss about and we also discuss about accounting concept, going concern, and accrual basis. We discuss about comparability, verifiability, understandability, prudence. So all these concepts we discussed during our lesson 1. And we also discuss how many types of financial statement we prepare in accounts, such as statement of profit and loss, statement of financial position, statement of cash flow, and statement of genuine equity. Then second lesson, we discuss about prepare a statement of cash flow. In this lesson, we prepare the statement of cash flow and we discuss operating activity, investing activities, and financing activities. And we evaluate as well what is happening in the cash position in 2 years of different companies' cash positions as well. And the lesson 3, today lesson we have LO3 and credit control policy. Credit control is very, very important. End of the day, there is a no cash, no business. So that's why credit control, giving credit to the people, increasing the sale. But end of the day, if we don't get the cash well in time, so we will be out of the cash, and out of the cash mean you not fulfill your requirement of the business as a cash. So our business will be dissolve or liquidate, we can say. So legislation will go through and we'll discuss different legislation like Data Protection Act, Sales Good Act, and various other regulations. We'll discuss about the civil laws like a contract. So what is meant by contract? Contract means that there should be how many parties offer and acceptance. There should be a legal binding. There should be a consideration. There should be a legal obligations as well if you offer and acceptance happen. So all this we'll discuss. Then we'll discuss, as an organization, what the credit policy we have and how this we can set, how this will help, organization to achieve its objective. Objective mean end result. That's why organization doing activity. They want to be profit maximization. They want to shareholder wealth maximization. They want to be serve the community and all these set of objective as an organization why you are in the business. So which we'll discuss. And the credit control policies, how we can analyze the key policies and how importance of credit control policy in our organization. So all this we will be focused and we'll discuss. These are inductive contents, which is all about the credit control. Okay, let's move back to our slide. If you have any question, please drop me email. So today lesson we have command verb. So we have a 4 command verb. Discuss, give an account, addresses a range of ideas and argument. If you're giving about the credit control, you're discussing this. Dwell, progress, and expand, utilize from a starting point. So you need to be look around how you develop it, the credit control policy in our organization, how strong it is, how you improved it. Analyze the separate information into a component, identify the characteristic, discuss the pros and cons, advantages and disadvantages of the thing. If you have a credit control policy, what are the advantages? If you have a too much credit control policy, you're not giving credit to anyone, what can be consequences for this as an organization? So maybe we can look around different organizations and their credit control policy. Evaluate. Make qualitative judgment taking into account of different factors. So you can make judgment, evaluate different factors. So you need to look around the interest rate, you need to look around the environment, you need internal, external, all the factors, and available knowledge and experience and evidence, all you to be addressed, evaluate. Okay, now we have, this is the inductive content, what we supposed to be learn. Under this, we discuss internal and external, we discuss about credit reference agencies, what those are, how we can, and credit control policies. Okay, so first we have a discuss how the legislation impact. So different legislation, so laws, there are the two different. Anybody knows what is the difference between civil law and criminal law? So civil law and criminal law. So what is the key difference between them? Civil law and criminal law. So civil law is also known as a private law, and criminal law is also known as a public law. So civil law is between human being, like we have a contract between organization and individual, and between individuals. So this is a civil law. If you not fulfill any promise, you not deliver employment law or various other laws, those are most of the civil laws considered as a civil law. Sales good act, like selling something, you're supposed to be delivered, you're supposed to be sell the car, you agree. So that all come under the civil law. But the criminal law, where you not fulfill the legislation of the government, like if we don't follow the DPA, Data Protection Act 1998, we have 8 principles. If we don't follow it, it will be a crime for organization. We're supposed to pay national minimum wage, which is £8 and 25 pence approximate now. So we need to be look around. We can go through, we carry on changing. So national minimum wage, if anybody is working in any sector above age of 24, should be get at least £8 and 25 pence per hours. So if you're not paying as an employer, so it's a crime, so it should be charged as a criminal. Okay, next now we'll go through what is meant by contract. The contract law, the sales goods and the service is typically a contract. Therefore, the credit control must ensure that each party abide by this contract. The law of contract is a branch of civil law. So law of contract is a branch of which law? Civil law. Civil law it goes in the county court. County court is, we have different court system, is called county court, and other goes straight into magistrate court. So that's we need to look around to different courts and deal with the different matters, or deal with the civil matters, deal with the criminal matters. The law of contract is a branch of civil law which determine whether or not promise to the legal binding enforceable by law, court of law. So we need to look at, if the offer is made, the response is further offer, then the counter offer has been made, original offer is terminated. The counter offer is offered in response to the offer. This can be rejected or accepted. So in a contract, you say, no, I want to sell £400. You say, no, I'm not going to pay 400, I'll pay you 300. But there should be now agree between 300 and instead of 400, then it will be offer and acceptance. If you're saying, no, we'll sell this 300 but nobody accept it, of course it's not a contract. Consideration both parties must do and promise to do or something aside of contract. So we need to look around some promise. Yes, consideration need to be sufficient, clear. Yes, it must be some values, like you sell the car, will pay the money, and some economics value involved in it. The legal, not against the law. Consideration should not be a DFT which is exists currently. We need to be look around in the legal and consideration. So which we'll go through further. Okay, next now we'll look now. Okay, anybody any question up to now? Okay. Other features required the contract include, if it's a contract law, the parties must have a capacity. If somebody is a minor, somebody don't have a mentally sound mind, it's not a contract. Ability of the contract and submit themselves an authority of law. Children and mentally disordered people can be restricted. If it's 70 plus and don't have a sound mind or with 90 plus, so we can't really put them into contract. They need a witness signatures, to put them in a contract. So there must be a certainty contract itself for the both and the legally possible. Written formality may be observed in some situation, but verbal can be contract. So finance professional can help to create and promote the ethics base. Yes, so we need to be look around the ethical side as well. So civil law is the ethics as well. So ethics is a part of civil law. So if you don't fulfill, your membership can be revoked, but not it's a crime. So we need to be look around. But if you don't follow the legislation, is a crime. Illegal practices, including money laundering, terrorist financing, bullying, short-term, and these can be charged now under the crime if money laundering act, because money laundering is act. Okay, next now we'll go through Late Payment Commercial Debt Interest Act 1998. Okay, guys, this is the act we need to be follow as well in the credit control. Late Payment Act allow businesses to charge other businesses customer interest overdue amount. Interest can be charged 30 days after the goods are supplied and the service is completed. The 30 days after the receipt of the invoice, the customer told the amount due is payable. After agreed date of payment, the statutory interest, which is a compulsory Bank of England interest, which is called base rate. Base rate. Anybody know how much is the base rate in England now? It is dropped down from 0.75% to 0.01% now, which is in pennies. So we need to be look around a significant drop, plus 8%. So if somebody don't pay now, it can be interest should be charged on outstanding amount 8.01%. That's max, you can charge. Okay, if you have any question. Okay, next now Data Protection Act. Data Protection Act is called, that was the data, it's luckily the same years. Yes, late payment, commercial debt interest is base rate and 8. We need to follow the legislation. We can, by law, we can claim the money. Okay, DPA, Data Protection Act. 1998. We can't really disclose the information to other people without the permission of the client which we are holding the data. So we can't really disclose the information. The act is held about the individual, not about the organization. So only with the relevant non-corporate customer are the data about individual who been to the customer organization had manually or computerized. So it's on all data. So computer data or you have manual data. Yes. So this law is applicable on both. So individual organization who are personal data, a computer bureau, an individual organization which process the data for the data user and allow you the process personal data and its equipment. So all we need to be follow. So data we need to be secure, nobody steal it. So the key principle, there are 8 principles. So data may be used for the specific purpose. So we get the information because we want to give the credit to the people. We need their date of birth, we need their location, we need some details, from the credit agency. So it's a specific purpose too. Now the purpose is fulfill the people make the payment. We can No, we can't sell their data to someone else and someone else can approach to sell the goods. Data must not be disclosed other party without the consent of the individual. So data can't be passed to anyone overriding the legitimate reason to share information. Yes, not. It is an offense of other parties to obtain personal data without authorization. Without authorization, if they get the data, we need to be make sure the data not being shared. Individual have a right to access the information held. Yes, whatever the information held by any government or private organization, I have a right to ask what sort of information they are holding. So I can get my file. It's called information file, like immigration file. If it's a home office, and we can get SAR, is called subject access request under the Data Protection Act 1998, and we have to, there is a legal fees. Like, you want to get the information about how many accounts you have, or we have recently PPI, is called payment protection insurance in UK, and you want to be claim something, and are somebody, for suppose, the company want to sell you mobile and they are agree to provide you these minutes and these term and conditions, offer you new mobile, and then at the end you have in a contract, is a verbal contract, they not send you any written paper. No, they saying no, we were agreed on these terms, we'll charge you £30 a month, we'll give you this, but actually your bill's coming now £50 a month. So now you have a right under SAR, you can get all the recording, whatever the conversation, and you can look around the contract, what you said, what you were agreed, and then of course, otherwise if they don't listen, we have in the UK is called watchdog, who is the regulator of these, the company. So you can complain to them, and they will normally scare, and they will sort out your things, your complaint. So you can do internally first, and then you do it externally. Okay, that's the one thing. So we have 8 principles. So these are the 8 points, we need to be follow. Personal information must be kept no longer than necessary. So like, maybe you only 12 months, 2 years, whatever the necessary. So personal information may be not sent outside. We want to be move call center abroad. So call center, we want to move to Asia. Like in the past, BT call center moved to India, and it was in Panorama. Few people in the call center, they steal the information, and that was in the public domain. So the people data, but the BT got the permission from the ICO, Information Commission Office. They want to be transfer the data, and then they want to be handle the data outside EU. So first we need to be not quickly you move the call center abroad. So the BT shares fell down. So we need to think about the data we have. If we taking outside the European Union, we need to be tackle this data, how effectively we can handle the data. So whatever we are doing, we need to have some consequences. So we need to be look around the BT shares drop, share price due to this news when it happens. There's only few individuals impact organizations. So we need a data is being fined. So recently, Facebook been fined around 20 million. Yes, due to the data breach. They sold the individual data to the various companies, so information leaked. So we need to be look around those. It's all under the Data Protection Act. And data subject expectation, organization only very simple processing and domestic use. No, we can't really. An entity hold the personal information are required adequate security measures. Yes, we need to be secure the data. These include the technical measures, the virus, and we need to be secure it. Subject have a access right, have a factually incorrect information corrected. So we need to be look around these. So please, if we're dealing with the credit, we need to look around. What occasions the company need to be disclose the data? When the consent by the client, Client give the consent, you can pass my information to any other, or you can send me the promotional material. When by law, court says, you need to, when law says you have to do in the wider, and the third in the wider interest of the public. So if somebody is involved in the money laundering and things, we can disclose that information. Okay, next now we're looking at Trade and Description Act. Trade and Description Act is state the manufacturer and the retailer and the service must be correctly describe what they selling, what they are selling. Like, if I'm saying, think about, drink. Yes, they are claiming is 100% pure juice. Yes, pure juice. So if it's not, so we look around because this is not a right, the thing. So you're telling lie really as a company. So we need to be make sure it can be even they can be charged false misleading statement about the goods and the services being providing under the Trade Description Act. The description should be contained. Contract must be written in the languages. Sometimes we need to be look around. It must be important suit affecting the clauses and the things within a contract. So this is the Trade Description Act, and we need to be as a company we must follow. Then the Consumer Act. Okay, in the past there was the act is called Sales Good Act, which is 1979, and the Service Act in 1984. No, all these acts being changed and replaced to Consumer Act 2015. So it's all about if you buy a good is not like you bought a book and the book is not fit for purpose. Book was to be read for adult, but you not really read it. You bought it and you give this your little one, and the little one says, "Oh no, Daddy, it's supposed to be a storybook, but here is the written is only 18 plus. Can read this book, so we're supposed to be. So it means their good is not fit for purpose, and we have a right to return that good." So if the good, they say this good will do this and that sort of, but actually the good is not fit for purpose. You as a consumer, we as a consumer, we have a right to return. So these are is come. So consumer right is a huge in the UK, and we have to follow the legislation. So in this credit control, we are discussing most of UK legislation. It varies in different part of the world, different legislation. So please, you can look around the local to address this learning outcome, but you either is easy to be follow this UK based legislation. Okay, next, Consumer Credit Act 1974 and 2000. So if you're giving credit to somebody, we have to be. So it's illegal to give the credit without checking the affordability. Affordability means people can't afford it, and you giving them the credit card. Affordability. So that's why the credit check is very important. So it's a crime now. It's giving the credit card, they can't afford it and they can't pay it, and we putting them, and their life can be, and they can default, bankrupt. So business that offer the goods and services on credit and learn the consumer are licensed by the Office of Fair Trading. So first they need a license to do this, Office of National Fair Trade. Then the borrower can settle the regulated credit agreement early, giving notice the lender and paying, and the seller lay down the rules requiring and information given to the borrower. Those are borrowing the money. So we need to be looking around the consumer credit. Trading without the license is a crime. Yes, if you must need to be licensed as well, and we need credit scoring as well. So these are the key legislation as well we need to be follow when we'll deal with the credit control and we deal with the consumer. Anybody any question? So please, if you're listening this recording, drop me email if you have any question, any area. So 3.2, develop the credit control policy. So when you want to be develop the policies, rules and procedures in our organization to achieve your objective. So we need to be look around. So in our organization, if you want to be achieve the objective, so we need to be make sure credit control policies are in place. What those policies are: overall item, no credit at all, credit only for particular classes of customer, the total credit offer such percentage of turnover. Procedures for the offering credit, obtain reference. So credit reference agency give the reference, reviewing the account information, customer visit, formal agreement, comply with the customer credit legislation, probationary period, and settlement term. Control age received debtor analysis, which is main trade receivable analysis, chasing slow payers. Yes, so is a gone. One is a due date we can offer to be early settlement discount to be improve our. Okay, credit risk. So assessment of credit status. A credit risk we have in the UK two major. One is called experience, other is called Equifax. So these are the two credit agency. Those give the reports on the credit. So normally credit score is work up to 1,000. So if your score is coming 850, which is mean very high, a really good credit score. So credit risk may that there is the possibility of the debt to become irrecoverable. You can't recover it. So the credit assessment is a judgment about the credit worthiness, providing a basis of the decision whether to credit. So unexpected risk, customer responsible, most irrecoverable debt problem about can be generate high revenue. The customer can be exploited, the trade credit full and overseas customer with the good reputation and no history of payment, and zero are negligible risk, the government institution. So always we need to look around where we can is a high risk or low risk customer. Okay, assessment of credit status, internal information, staff knowledge, customer visit, financial analysis, customer account. So like a financial statement we can use it. So existing customer, increase the limit. Internal information if we have, we can give them more credit. New customer request credit. External source of information, grant credit, formal credit term, and refuse credit. So these are the information we can look around. Bank reference, we can get reference from the bank. Trade reference to whom they used to trade. Credit reference agency like Equifax, and company house where we can check their company accounts or return they have submitted. Media publication about the companies and the customer. Internet search we can do, and a management account if we can from the customer. So bank reference, yes, we can get. Trade reference, type of reference which we can use. Credit reference is a credit reference agency. Those can be give the reference, and that can help us to be monitor their credit worthiness. Okay, this is quite good. We can look around the credit report. So it's called soft check, or the normally we should do the credit check, proper full check, to authorize the credit. Okay, then now we looking. Anybody any question up to now? Another thing to be make your credit policy always good to be you look around the ratios. So ratio analysis is very important in so profit margin and various these sort of the ratios that will help to decide the company is a good in performance position and working capital cycle, how much is the running capital, so you can improve in your policy can be you look the ratio and which ratios and which percentage which the next learning outcome will go through, and we'll check. Credit scoring, yes, what score you will give them. Credit scoring is a method of assessing the credit worthiness of individual on the financial and the business detail and public available data, payment record, owner economics index. All we can look around the profit, operating profit, interest cover, liquid ratio, gearing ratio, and what the credit score, and we can authorize or not authorize. So using the credit control information, granting credit rating, credit reviews we can do, and then we can ask these questions. Where to grant the request is entirely what we do. We give them credit or not give them. Okay, next a bit, from your end, maybe slightly difficult to read, but I'll try to be makes, bigger. Let's see now. Reduce the size to be read them. Okay, next now, let's please. So if we looking at analyzing the component of credit control policy, assess the customer credit decision you will give them or not. Monitor if somebody not paying the payment in future, they want credit, so you don't give them. Maybe you give them or you reduce them their credit limit, because based on the economic situation such as coronavirus now, because the people job at risk, and ultimately they can't afford it to be, and they want to be borrow, and at the end they will be default. So we need to be look around, take the bad debts in action. So if we have a lot of bad debt as a business, is very difficult to sustain all. So in a line the component in the credit control policy, these are the component are in place or not. So next now we're looking the we've been given is a sort of the task. We need to look around. You work as a credit control manager in this company. We've been given all the ratios. Losses, we have a, if we have a loss in the company, so we'll give the minus, and if we have a profit less than 5% is a zero credit score you give them. If is the profit is between this percent 20, if more than 20. Interest cover ratios, if you come in these, yes, 4 times or more, you give them points 10. Liquidity ratios, it means current ratios, if you calculate is come here, so you can give them point. If it's a 1.5 or more, you give them 10. Gearing ratios, if it's very high, then you give them negative. If the less than 25, you give them positive points. So a risk is, then we can decide based on if is between your score of these will come between 60 to 21 is very low risk. If your low risk is between 20 to 1, if your point medium risk, if 0 to minus 24, it's a high risk. If it's a minus 25 plus, if your score minus will come. So we need to look around this question, and then we can decide, So is the profit and loss we've been given the balance sheet, and then we've been asked to calculate the ratios, and we calculated the ratios. The profit, we calculated 2003, and we give the rating 10 10 10, and we rate based on the rating criteria which is set by the company, and you're the manager to make a decision. Either you give them credit. So in the year was 2010 now, yes. So we need to look around. So overall total credit rating is 40 and 30 in these years. So is increased by, so is a very low risk in this, because it's fall in our rating criteria. If you look here, we've been given, yeah, between this is a very low, yes. So is a very low risk or low risk the year, if we look both, yes. So we can accept it. Current year, medium, and previous year, we accept it. Very low current year and high over the it is request latest management accounting and deferred decision. Yes, you can. Very high risk or high risk rejected. Medium risk if is accepted. Medium risk, yes, so you can. So we can, based on their credit score, what we accepted this against our policy. So we draw a policy, we did the ratio analysis, and we accepted credit, and we can grant the credit, whatever the credit being requested in this question. So based on these criteria. Anybody any question? Okay. Next we're looking now 3D1, which is we have to evaluate the importance of comprehensive credit policy. Of course, comprehensive credit policy is the lifeblood for organization, and we need to make sure we have a good credit control policy in place. So otherwise it be a problem sustainability. So effective protect proceeds both domestically and internationally. Yes, we need to look around effective control, credit, and account receivable management. AR is account receivable. We need to look around that and collection. So our receivable days should be less, and the payable days should be more. That's a strong. Preferred credit managers understand the client and the country and the specific needs. We need to understand the where. We need to understand the legislation is quite crucial. If different country have bad debts, we need to look around the industries. We need to look around the objective we want to be maximized. It could be impact, so we need to be regular review our receivable, granting credit for the our how much sales you can increase the sale giving them long credit, but it can be impact in the organization. So credit control policy can we evaluate, so you need to be look around credit term and condition. So credit limit, a maximum amount the customer maybe now youngster with age between 19 and 20, they have a car worth of 40-50,000 pound, the company some down payment is only 500-600 pound you pay and you get, then what will be happen, they can be default. So we need to be look around what is the source of income behind, what sort of the asset they have, so we need to be secure it. Credit term, the length of the time we need to allow and the amount outstanding we need to look around. The cash on delivery, the cash before the shipment, cash with order, so not 30 days, payment due after delivery, load our load, so we need to be make sure pay for the last load, yes, last, the delivery, and the net monthly how much outstanding you have. So refuse credit, we can refuse the credit. Poor or non-committed bank reference, yes, if we not got it. Poor credit reference, we need to concern about the viability, validity of the trade reference. Lack of historical at the new company or how many years, indication of the business weak from the ratios, and the poor credit agency reports. So all this, leads to we can refuse the credit if we have these things. These all we can set the policies and we can evaluate these things. Like we check in the previous the is 3M. So we look around there the credit policy ratio, then what bill and the score system is placed. So we authorize it the credit. So we need to look around this. Under the communication of refusal of credit must be communicated to customer. Reason for clearly we need to explain it why we are refusing it. And maybe we accept that all those not desirable, the business will not lose. Credit manager maybe wish to be encouraged to apply for credit term for the future. Newly formed company, there may be little external information. That's why the credit control manager refused, but we can communicate it, or in future we can grant the credit, but we need to be regular monitor for it. And communication is alive because the communication effective it can be. So you have to build the trust of your client. So what I did, guys, I copied the link. Is called e-learning. So what you can do, you can copy this link and you can do some questions. Please, it's quite good to be develop understanding. If you're working as a credit control manager in the credit control department, you're dealing with the customer, and it can be is a very crucial, and it's good to be enhance your knowledge in the business. Of course, real world we have to deal with the credit, we have to borrow money, sometimes we have to get the goods in 30 days, 40 days, whatever the credit term, and all, we need to be look around, and is the credit control policy the survival of organization. Okay, that's all today lesson. Today lesson we learn about the credit control, and we discuss about be able to prepare the credit control policy. And next lesson we'll discuss about assignment brief. If you, in the meanwhile, if you have any question, please drop me email on my email address anjum@ukversity.co.uk. Thanks for attending, and if any question, if you're listening this recording, drop me email. Thank you. Bye bye.